Thank you, Zia sir, for this enlightenment. Everyone who's heard the speech would have no doubt about the role of ICMA Pakistan with reference to world economy, Pakistan economy, and FRED. FRED could not have been conceptualized without the support of our partners, the South Asian Federation of Accountants, and Dr. Subodh Kumar Karn would enlighten us about what FRED brings to the table and how the topic of today's FRED affects our region. Mr. Subodh Kumar Karn.
Today, FRED conference, chief guest, Madam Samsad Akhtar, Director Governance Global Practice of the World Bank Group, Mr. James Brahmi, World Bank of Country Director, Pakistan, Mr. Elango Patachumuntu, President of CAPA, Mr. Manoj Fernandez, President of Icap, Mr. Riyad Chamadia, President of ICMA, Pakistan, Mr. Jia Awan, representative from World Bank, President APA, Mr. Kon Ing Tong, World Bank's representation, Ismailia Krisi, President of SAFA member bodies, past president of SAFA, distinguished guests, and all others, ladies and gentlemen. I warm good morning to you all. It gives me immense pleasure to be standing in front of you all in this third forum, and it's even more satisfying that SAFA members are hosting these grand events. I would like to extend my gratitude to the Institute of Chartered Accountants of Pakistan and the Institute of Cost and Management Accountants of Pakistan for hosting this event with support of World Bank Group. As we all are aware that economic growth and financial development are closely tied to the accountancy professions. Proper coordination among them is a must, and we see many conferences being organized throughout the globe, highlighting the importance of this. In fact, financial development is the cause of economic growth in terms of short-term dynamics, whereas economic growth sustains financial development in the long terms. Based on the global findings, it is necessary to launch reform program in the financial system to consolidate at the improve the efficiency and effectiveness of the financial system, as well as tackle the emerging changes. Thus, consolidation of the system is not only for the positive reinforcement between the economic growth and the financial development, but also for the post-crisis resilience and sustainability. The crucial role of the financial sector in the process of economic development and growth is widely acknowledged by the scholar and policymaker, and they have also advocated for the active role of accounting professionals to make this come and true. Over the past 2 decades, several countries have liberalized their financial sector and have implemented various financial and structural reforms where the role of the accountant could not be ignored. In some advanced service economics, the liberalization process and the implementation of financial reforms have shown their effectiveness to bolstering economic growth, and the financial sector has become a lifeblood of the economy. In this context, I am of opinion that well-developed financial system can contribute efficiently in promoting economic prosperity and development, which is needed for all of nations in South Asia. With this, I would like to conclude, and again, thanks for Icap and ICMA Pakistan for organizing this forum, and I wish them great success. Thank you.
CAPA represents 31 national professional accountancy organizations, and its president, Mr. Manoj Fernandez, could not be with us today, but he's agreed graciously to join us via video link.
Honorable Chief Guest, Madam Samsad Akhtar, distinguished officials from World Bank, President ICAP, Mr. Riaz, also Director of CAPA, President ICAP, President of SAFA, President AFA, who is also present there, distinguished board member of Icap, distinguished PODC chair and past chair of SAFA, Mr. Arjuna, distinguished guests, ladies and gentlemen. It's my privilege to join this trade conference being hosted by ICAP and ICAA virtually. Unfortunately, I could not travel and be present with all the ladies and gentlemen there in the beautiful city of Karachi, where I had the occasion to travel earlier. And honestly, I was looking forward to be present there today. But for reasons beyond my control, I am forced to join you virtually. Be that as may, I am very delighted to see that FRED 3 is being organized by ICAP and ICMA Pakistan with the support of the CAPA, SAFA and AFA. FRED, as was mentioned, is Financial Reforms for Economic Development. We as professional accountants can play a very important and pivotal role in the economic development of our countries. This is the third FRED which is taking place. The first one was, as was mentioned earlier by other guests too, in Colombo, then in Kuala Lumpur, and today in Karachi. I wish this FRED 3 a grand success. Very ably topics have been selected. Very distinguished faculties are going to address on this subject. We need to remind ourselves that resources are limited for each of the jurisdictions. It is essential that we capitalize on these resources in a fruitful manner, in an optimal manner, so that the overall economic development of these regions can take place. I wish FRED 3 a grand success, and I thank the organizers for enabling me to join through this online facilities. Thank you.
Thank you very much, Mr. Manoj. Just a resonating sound today. All three FREDs have been held in cities where it's pronounced with a K: Colombo, Kuala Lumpur, and Karachi. Before we invite Mr. James Bumby to deliver the keynote address for today's conference, I would request all our participants to log into the Slido app, accessible via the link flashing on the screen. Can we have the link, please? Yes. There are 2 e-polling questions appearing there. I would please request you to take a minute and log in. The event code is FREDPOLL1. FREDPOLL1 is the code for the poll. And the 2 questions that are being posed there is, what is the global infrastructure financing investment gap to achieve 2030 Sustainable Development Goals, and the infrastructure financing gap in Asia to attain 2030 Sustainable Development Goals. Please vote in your answers while Jim would be delivering his speech, and we would discuss the answers later. Would we be discussing them? Let's see. I would now invite the keynote speaker for the conference, Mr. James Brumby, Director of Governance Global Practice, World Bank, to talk about World Bank's agenda with respect to expanding finance for growth, governance, development, and role of the profession. What you can't see on the screen, as far as James is concerned, I just got to know that he was a bass guitarist with a band called Panic Button. I'm learning some very, very strange facts today with regards to my keynote speakers and participants of plenaries. James, can we have you on stage, please? And a round of applause for him. He's probably used to a lot more being a bass guitarist.
Well, good morning, everybody. I should add that I'm not a terribly good bass guitarist, which maybe that's why I'm the Director of Governance in the World Bank. Let me begin with some formalities. The President of the South Asian Federation of Accountants, Dr. Subodh Kumar Karan, the President of the Institute of Chartered Accountants of Pakistan, Mr. Riaz Rahman Chamdia, the President of the Institute of Cost of Management Accountants of Pakistan, Mr. Zia Mustafa Aman, my former colleague, former Finance Minister and Governor, Shamshad Akhtar, good morning to you, and virtually the President of the Confederation of Asian and Pacific Accountants, Dr. Manoj Vadnas. Prominent speakers, moderators and panellists. Sponsors, I think we should mention them, Parco, Mizan Bank and Wemite. So I'd like to begin just really by acknowledging, well, first of all, thanking the Fred 3 organisers for inviting me as a keynote speaker today at this august gathering and timely topic, expanding finance for growth, governance and the role of the accountancy profession. It is a substantive topic, so I will be speaking quite substantively. I hope you are ready for that. I'm pleased to be here in Karachi, known, I gather, as the City of Lights and the economic backbone, really the throbbing heart, I think, of the economy in Pakistan. And I thank everybody so far for their courtesy and hospitality. Last night's show, I think, did a great deal to present Pakistan in a very dynamic, colourful and attractive way. I thought the dancing, both classical and folk, was superb, a beautiful display of colour, movement and light. And of course we do wish Pakistan very well on its new journey under the leadership of Imran Khan. As I did last night, I'd like to thank the accountancy profession in this region for being at the forefront of development and continually exploring ways of strengthening the profession to meet really quite strong new demands, supportive of the development outcomes in the various countries within this region. This biannual FRED forum is, I think, testimony to this commitment, and the World Bank is very pleased to be part of this noble journey. And a special thanks to the hosts of the FRED Forum 2018. In sharing some time with you today, I did say it would be substantive. I would like to address three separate but interrelated themes. The first one is, what is the nature of the development challenge facing the globe, and how is the World Bank responding to this? We refer to this within the World Bank as moving from billions to trillions, and we associate it with the idea of mobilising finance for development. Second, I would like to focus on our perspective concerning governance reform as being a key ingredient in uncorking the bottleneck for mobilising finance for development. And then thirdly, I'd like to share some thoughts about the contribution, the very specific contribution that the accounting profession can make in this area. Can I just check that I can be heard satisfactorily? I'm a bit unsure which speaker I'm meant to be speaking into. Bass guitarists often, play in the quiet speaker at the back, but okay. So the development needs of the world, as it sets out to achieve the Sustainable Development Goals, cannot be achieved through the deployment of development assistance. That's very, very clear. In fact, two other sources of finance are fundamental to this quest. Countries' own revenues, own revenue mobilisation through taxation and the like, and the mobilisation of private sector finance. In the bank, we've oriented a lot away from thinking first about official development assistance into, first of all, stimulating the country's own revenue, and then to assist in the process of mobilising finance for development. So in the world of domestic resource mobilisation, the bank now has about 120 staff working globally on tax policy and tax administration issues. We have more than 600 active programs involving analytical work, lending operations in more than 100 countries. We have, together with others, championed the development of medium-term revenue strategies, including here in Pakistan. And we're generally orienting around the idea of getting every country in the world to have a tax GDP ratio of at least 15%, We've also invested, I think, a lot of effort with our colleagues at the IMF, the OECD and the UN to attack gaps in the international taxation architecture. The world wants, we believe, a fairer tax system which supports development, encourages investment, but also, and this is really important, helps protect the weak and the vulnerable. We are together working on that objective. There is a lot to be done. For instance, the tax cap, I think as many of you would know, here in Pakistan is estimated around 10 percentage points of GDP. We believe that we are seeing success, but as we know well, increasing tax take does take a lot of time. It requires an investment in institutional capacity as well as overhauling tax policies. In fact, I have to leave here today at about 11 o'clock, I'm sorry to say, as I'm travelling to Islamabad to meet the new chair of the FBR, Mr. Janzeb Khan, to continue the discussion between the World Bank and Pakistan. Taxation, of course, is not only important for mobilising resources for government, it's also important to the quest of mobilising private finance for development as well. Private investors typically want certainty in the tax environment where rate and policy changes are well thought through and well communicated, and where the actions and operations of the tax administration itself are transparent and make tax compliance a sensible choice. Countries are putting a lot of effort into this, and accountants have a key role. But while domestic resource mobilisation can assist greatly in supporting the Sustainable Development Goals, much more is needed. In infrastructure alone, the estimated global need is 57 trillion of spending to meet the infrastructure gap, with, for instance, close to 17 trillion in roads alone. Now, these estimations, they are not an exact science because the numbers are so vast and need is not exact, but the order of magnitude is nevertheless completely stunning. With many countries having increased their debt in recent years and having growing obligations associated with the ageing of their populations, the actual outlook for strengthening their revenue positions and along with it an increase in fiscal space actually looks not all that favourable. In this context, the multilateral development banks have been asked to do what they can to help the efforts at domestic revenue mobilisation on the one hand and the creation of fiscal space through more efficient spending. But importantly, in addition to this, we've been asked to work with countries to catalyse private investment. In the bank, we refer to this as MFD, or Maximising Finance for Development. So MFD in total is part of what's, I think, a reasonably described an ambitious multilateral development bank effort agreed through the G20 and articulated by the principles known as the Hamburg Principles, which sets out our collective strategy for crowding in private sector finance for growth and for sustainable development. Aside from recognising the importance of country ownership, these principles include supporting the country's investment climate, market liquidity and project management capabilities and governance, prioritising commercial finance and pursuing cost-effective non-government guaranteed financing, and contributing to the optimal use of scarce public resources. The MDBs as a group have committed to collectively increase private financing mobilised by 25 to 35% over the next 3 years, and we are to review and strengthen internal incentives for crowding in private solutions. So as part of that, part of looking internally, this means our teams are asked to first evaluate and advise clients whether a project is best delivered through sustainable private sector solutions with limited public liabilities. If that is not feasible, teams are then asked to consider where the World Bank support for an improved investment environment, for instance, improved creditworthiness or risk mitigation, could help. If neither option is available, then and only then is the use of public and concessional financing encouraged. At the moment, about 20% of the World Bank's operations for the just completed year, FY18, are considered to be MFD enhancing. That includes directly MFD enhancing and indirectly MFD enhancing. So what sort of projects are involved? The projects include water sector reforms, for instance, in Benin, in Kenya and Uruguay, and power industry reforms and operations in 10 countries. I think that one of the riddles or concerns about this whole topic is that there is adequate private finance available in the world. There is, in fact, not really a shortage. When we look at banks, investment companies, sovereign funds, public pensions, infrastructure funds, there's well over 100 trillion available. But these funds seem to find it hard to match themselves with the public need. So while we are doing our bit through our operations and supporting through a number of analytical products, might there be other factors to act as a barrier to mobilising finance for development? Our work suggests that the quality of governance is a major determining factor in the preservation of this gap between demand for financing on the one side and the supply of that financing on the other side to meet that gap. For this reason, we believe that improving governance can be a key aspect for decorking the bottleneck around the quest to maximise finance for development. Accordingly, we're looking at developing something tractable, 10 governance principles associated with maximising finance for development. So I just want to very quickly go through some aspects of them and relate them to the tasks of the accounting profession. So while the first 5 principles broadly use the public investment cycle as the organising framework, the 6th covers the activities of entities providing infrastructure services, while the 7th to 10th principles cover key cross-cutting governance elements such as transparency, public participation, social and environmental concerns and integrity. In our view, the profession has a role to play in many of these principles. For instance, it's well documented that accountants and accountancy have important roles to play in garnering a robust planning framework, as in fact was alluded to already this morning, which accords appropriate weight to the accuracy of estimates and understanding the financial implications to determine affordability. They're covered in principles 1 to 3. Similarly, the mechanisms of value for money consideration requires on accounting input. Of market-based transactions, which is principle 6, accounting input. Of operations and maintenance, again, accountancy is central. That's principle 5. All of these rely to an extent on the role of the profession in government, but also the role of the profession in the private sector. Principle 7, concerning transparency across the cycle, and Principle 10, about integrity being incorporated, clearly require accountants playing important roles. Accountants do carry a baton of transparency and have direct responsibility towards investors in their capacity as external auditors, chief financial officers, as well as internal auditors. They can reinforce integrity by having financial statements giving a true and fair view and applying the appropriate international standards. Similarly, sound risk management, internal auditing practices, as well as robust internal control frameworks, external audit and oversight, robust reporting standards associated and ethics are crucial underpinnings to protect and promote the integrity of our financial systems and our practices. South Africa, I think, for instance, has moved to full adoption of accrual accounting under international financial reporting standards since 2005. Some South African entities and metropolitan cities are successfully raising bonds for their public investment plans, and their fiduciary reporting practices are very significant in the way that the market looks at their credit worthiness and the way that they are likely to manage risk. Reflecting, I think, a wider concern for narrow finances, Principle 9 calls for measures to promote social and environmental sustainability being implemented also across the investment cycle. We know that integrated reporting and sustainability reporting are key tools towards this end, and these concepts have done a lot to revolutionise reporting and to increase the relevance, I think, of the profession to very real social and environmental concerns. In fact, it was gratifying to read yesterday, flying over in the newspaper, that a Sri Lankan company has been awarded the contract to assist with the production of the annual report of the Global Integrated Reporting Regulator, the London-based Integrated Reporting Council. Projects require risk management. Accountants are trained to have an integrated behaviour towards risk management via objective measurement, analysis and assurance, which underlie good decisions. Risks are often seen differently depending on where you sit, but one thing that the accounting profession brings is a similar framework to looking at risk wherever you sit. This is important. The IMF and the World Bank, working together, have identified 52 risks across 11 categories that are associated with PPP contracts. Accountants can and should be at the forefront in advising decision makers and risk management. This is another case, I think, where South Africa is really at the fore. They really have attached enormous importance to risk management in public financial management. In order to improve the maturity level of risk management from the current level, 3 out of the maximum maturity level of 4, the Treasury initiated the integration of risk management practices to be aligned with strategic planning processes. When one talks to folks from the South African Ministry of Finance and Treasury, risk management is very much part of their consistent framework. The Indonesian government, also having recognised the important role that internal auditors can play in the risk management in the public sector, established National Internal Audit Institution, and that's leading the implementation of the COSO-based government internal control system in all line ministries. The strengthening of the Indonesia's internal control processes, I think, was directly related to their ability subsequently to produce financial statements which were the first time free of audit qualification. That's an important milestone in the quest to secure investors' confidence. Financial statement audits, essential to helping capital markets function effectively and with confidence, are helping today's governments and business leaders improve the performance and operating processes. According to a new Deloitte survey, almost 3/4 of highest level executives in senior management and 91% of audit committee members who responded agree that audits of financial statements identify opportunities to improve business performance. So a question to you, is it of concern that core financial auditing seems to be accounting for a smaller share of the overall activity in the public sector, even in jurisdictions where there are delays and quality issues with reporting? And that's an open question. Perhaps this is a question, or this is a consequence of a needed change in orientation. Accountants are stepping up to the challenge of a new agenda around private finance for development by adopting things like good governance codes or similar, some of which we heard about this morning. And we recently saw accountants come together, for instance, in Panama City to create the Panama Accord, which is designed to leverage private sector partnerships with government. The Accord is organised under 3 key heads, being improving quality and transparency of fiscal and financial information, strengthening accountability, and enhancing stakeholder collaboration. But it was the proactive measures of the accounting profession that has put forward the Panama Accord. In the case of Sri Lanka, the Institute of Chartered Accountants issued the Code of Best Practice on Corporate Governance jointly with the Securities and Exchange Commission, for listed companies, including some state-owned companies. Similarly, it's encouraged to see that Icap and Icap has worked with Securities and Exchange Commission of Pakistan to introduce Code of Corporate Governance for public sector entities. All this suggests that accountants are intrinsic to the pursuit of the governance objectives around mobilising finance for development. But can we go, in fact, much further and ask whether further opportunities exist for the profession to support this agenda, to turn the notion of billions to trillions into reality on the ground, into inclusive development which continues to lift millions out of poverty. From the World Bank point of view, we believe that there's a very significant role that the professional accountancy organisations can play in directly facilitating these development efforts and endeavours. A strengthened accountancy profession, supported by sharpened skills, would want to see more harmony between the public and the public sector standards. Alignment of public and sector reporting standards takes place when a country adopts IFRS and IPSAS, both harmonised against accrual concepts, including the recognition of assets and liabilities. It follows that the benefits of accrual accounting and enhanced financial disclosures are significant and directly related to the increase in private sector participation financing of national development programs. Logically, it makes a lot of sense for wherever there is a commonality of transaction that the treatment is very similar in the public and private sector. I think the benefits of global standards are well documented, and perhaps there's no profession more than the accountancy profession that has been at the forefront of embracing that. So these benefits include encouraging transparency, easy comparison on transactions that cross borders and jurisdictions and sectors. They remove translation and reconciliation costs. They improve the ability of all companies to attract capital from a larger pool of finance investors, which drives down, or should drive down, the cost of capital. And it reduces the opportunities for regulatory arbitrage and tax base erosion and profit shifting. At the very least, it is beholden onto the profession at country levels to aspire to the adoption of accounting and reporting standards that recognise all assets acquired, constructed or developed in terms of PPPs before and upon entering into an agreement, and the appropriate recognition of liabilities and disclosure of contingent liabilities. Of course, accountancy bodies in the region have been active. For instance, the Malaysian Institute of Accountants played an active role in supporting the government's move to accruals. MIA, as it's called, was an active member of the Government Accounting Standards Advisory Committee in Malaysia and shared insights on the application and implementation of accrual-based accounting standards. The Institute of Chartered Accountants in Sri Lanka established a public sector wing and embarked on issuing jointly with the Ministry of Finance accrual-based accounting standards closely aligned with international standards, enhanced training and capacity building on public sector reporting, creating greater awareness of and capacity to implement the public sector accounting standards, and pilot testing these standards in a number of key entities. But quite frankly, in many places, for too long, the public sector accounts have provided a hiding place for undisclosed assets and poorly recognised liabilities and undisclosed contingent liabilities. In the past few years, a Swedish author, Dag Detta, has received a great deal of acclaim for making a very, very simple point. In many countries, a major contribution can be made to narrowing the infrastructure gap by just rearranging the balance sheet, by moving poorly used and maybe not recognised assets onto the balance sheet and realising them so that their associated value can be put to a better social and economic use. But to do this, the first step is really to have the assets registered and to have them valued. Work in a number of countries suggests now that this task is getting easier rather than tougher, which I've got to say is not the way everything goes in life. New technologies, including satellite imagery, can be deployed to identify assets so that the accountants can perform these roles more easily. It's possible, more possible, to leapfrog, to apply these technologies to move ahead more quickly than before. Where there is a will, there is generally a way. For instance, in Mexico, subnational governments take more care now to register their assets that they've found themselves underinsured after natural disasters. So that has created the will, and the way exists through technology and applying appropriate standards. So it's great when technology and initiatives move in the same direction. When New Zealand ignited the government accrual flame 29 years ago with its path-breaking Public Finance Act 1979, it was unclear if other countries would react. Initially, with take-up in the most developed countries only, accruals are now spreading. According to IFAC, 25% of governments now report on accruals, but this will grow to 65%, so from 25% to 65% within 5 years. This is important. And if your country does not propose to move into the accrual world within 5 years, it will be considered a laggard. In fact, only 17.5% of countries will be on strictly cash in 5 years' time, with the same number transitioning to accruals. Well, I think that adds to 100. 17.5 on cash, 17.5 transiting to accruals, and 65% on accruals. In my mind, one of the true benefits of adoption of common practice across the public and private sectors is that it removes one of the artificial barriers to movement of accountants between the public and private sectors. My own experience in New Zealand, where I happily spent 4 years, suggested that this was one of the somewhat unidentified or unforeseen benefits adopting public sector standards closer to private sector standards. And the benefit, I've got to say, from what we observed, was two-way. The public sector benefited by the embracing of private sector practice, and the private sector benefited from understanding more about the operations of the public sector. So from the New Zealand point of view, I think we ended up with an enriched public sector and enriched private sector, which is, of course, the definition of a win-win. Of course, to do this, it also requires a relaxation on some of the other labour market barriers between the two sectors and a focus on the competencies necessary to be able to fulfil the role of the accountant in both sectors. I think to this end, around the skills, professional accounting organisations, accountancy organisations, have a key role in supporting the public sector to leverage its core strengths. This can be achieved through the provision of professional training and certification, as well as strengthening the nature of the partnership and information exchange between public sector accountants and private sector accountants. So from that point of view, the opening remarks from the accountancy leaders in this region were indeed very heartening. It's all with a view, I think, to building capacity in both sides. Inherent in this is a requirement also that public sector accountants need to shift their focus a little bit from a sort of concept of stewardship more to a concept of development, and to secure the requisite capacity to provide professional analysis of financial options or financing options in order to directly foster development. The Institutes of Chartered Accountants of Sri Lanka, as we heard, Malaysia and Pakistan, have all signed memorandums of understanding with the Chartered Institute of Public Finance and Accountancy, CIPFA, of the UK, to offer the public sector access to relevant courses and explore gateways to professional membership. Strengthening the delivery of professional services in the public sector also requires having skill sets at the technician level. Professional accountancy organisations have a truly key role in offering training to the cadre of accounting professionals by introducing technician-level qualifications, providing intermediary certifications along the way to the professional qualification. They therefore have a duty to support institutions already offering accounting technician training and accreditation. They can, of course, also support the public sector by providing training to SAIs on financial audit, as well as performance and forensic audit methodologies. I would say, provided that they don't crowd out financial audit. And as I mentioned before, risk management, project management, and data analytics are all requirements for managing the public sector, private sector interface for some. These are new or emerging skill requirements and fall somewhat on the role of the professional accountant. These areas could be well embedded in professional accountancy curriculum. Furthermore, ethics is a core value that should, we believe, be articulated in accountancy students at an early stage of study and should be a core part of the curriculum of the professional study of accountants. Sometimes I think with the subject of ethics, unless it's really central and interwoven with everything else that one learns, then it is treated a little bit as an add-on and an act of compliance. There's also a requirement of the IFAC Statement of Member Obligations. Sri Lanka, for example, significantly increased the coverage of ethics when it revamped its curriculum, and students are taught and assessed on ethics across all professional stages. This is what we would encourage. In addition, students who successfully complete the examinations are required to complete an online ethics module prior to application for membership. This will help strengthen the integrity of the profession in the delivery of fiduciary and development functions. I think while these are all areas where the profession can play a general role to support the contribution of the profession to mobilising finance for development, there are some very specific areas as well. I would say taxation is one. It came up at last night's dinner and could be a gainful topic for an entire event sponsored by Fred. I am responsible for the domestic resource mobilisation at the World Bank, so I'd be very happy to talk about it, but I think I've probably just about got to the end of my time, and I encourage a focus very specifically on that topic for a future event. I think, just in summing up, Chief Guest, ladies and gentlemen, the profession plays a general role in supporting a social and economic environment conducive to investment, one which reduces associated risks, and in shaping individual projects. In this, the profession contributes to both the public and the private sectors, and in projects that straddle the two. The cardinal role of the profession is being increasingly recognised. History suggests that finance is often more available than it initially appears, that there is finance available that is awaiting opportunity. I think this is consistent with the figures I referred to earlier. There is financing available and there is investment need. The missing component is the creation of the environment conducive to matching these funds with this need. I hope in these comments today that I've showed that the accounting profession has a critical role in creating the environment where opportunity is converted to reality. So with that, I thank you very much and wish you well for the forum.
The key message of Jim's speech to me was that availability of finance and has to be moderated by governance, and that is the key to bridging the gap between demand and supply of development finance. For that governance structure, he's placed an exceeding amount of reliance on finance professionals as they have an attitude of transparency and accountability. I would like to thank James for reposing this trust in us, because here we were thinking that with artificial intelligence, accountancy would be a redundant profession. A couple of questions from the crowd with respect to James' address.
Good morning, Mr. James. I'm here. How are you? Thank you very much for your kind visit at Pakistan.
Actually, I'm a little bit lonely, to be quite frank.
No problem. We are with you always. Okay, my question is this, that how can world accountants suggest to the world leaders in fulfilling global infrastructure investment gap to achieve 2030 sustainable development gaps in Asia and from global perspective? Thank you very much.
Yes.
So if I understood the question, it was how can the profession influence global leaders? I think that's a question to everybody, right, all the time, is how do we communicate what is important to us and we believe to a satisfactory outcome to global leaders. And of course, the space that global leaders have to consider different perspectives is always congested. So it's hard to get things on their table and presented in a way that they respond to. I really do think that part of the task is to investing at least a bit in communication, but the other part of it is to invest in understanding or research around what the different levels and qualities of the accounting system make to the specific abilities of companies and economies to mobilise finance. So, I mean, part of that is a research objective, but part of it is a communication objective. I mean, from my own perspective, I think the accountancy profession has got stronger and more strident in being able to put a coherent message about what it brings to economies and their effectiveness. So I think the accounting profession is on a very strong base. It just always needs to convert what it does to an outcome which matters. So the outcome that matters that we're talking about here today is mobilisation of finance, but there are other aspects that then mobilisation of finance assists with, such as reducing the infrastructure gap and access, thereby bringing people out of poverty. So I hope that that's a clear enough response to your question.
We have time for just one more question. The gentleman there.
Assalamu alaikum, all of you. My name is Amir Nadeem, and I am an associate member of ICMAP. In a lot of conferences, we discuss about AI and big data also. We discuss here how many investment in finance field. So my question is that Cisco is one of the renowned company of the world who Cisco says that in 2020 lot of devices connected in the world, approximately 50 million devices connected in the world. So Cisco focus on the web of things. Lot of devices connected, but nowadays devices not connected or not communicated to each other. But after 3 to 4 years in 2020 or in 2021, lot of devices in the world. So why we should not discuss about or why should not be invest in devices or focus on these things? Please share your views.
Can we have another question so that somebody from this side, so that James can answer both of them simultaneously? James, would you like to respond to that question?
Yes, certainly. Thank you for the question. I think with a topic like I was presented today, you make a decision about where you're going to focus. Certainly a very important part of the Maximising Finance for Development consideration is that it embraces disruptive technologies. So that's part, if you like, of our logical chain in the World Bank and in the multilateral development banks in supporting MFD. That is to support also the application of what are now being called disruptive technologies. I did allude, I think, in once or twice to the fact that these disruptive technologies are changing some of the ways that we can go about quite core or instrumental things and leading to a change of orientation, perhaps in the way we execute some tasks. For instance, I did a little bit of work in the Philippines and they were able to photograph the size of their road network to such a degree of accuracy that it was quite clear that some of the roads were made a little bit narrower than they should have been. So the contracts, in a sense, were not delivered in the way that they should have been. In a sense, depending on how you do that, that can be a big data response or it can be a managed response. So I think that would be a very good other topic for an event like FRED. I don't know if that's been covered in the past, but it is about, I think as you're suggesting, it is about embracing disruptive technologies because if you don't embrace them, they will embrace you. And it's probably better to embrace them.
James, I have a question for you, and that is specific to the Pakistan perspective. We talked about the supply of development finance, and that comes mainly through taxation. And then the governance structure, that was the PPP audit that you talked about. What role do you think that the FBR or the Auditor General of Pakistan office has to play in that regard? You are going to Islamabad, I believe, so would you be having a chat about that?
Look, I think Auditors General are incredibly important in all of this. As I tried to allude, the role they play, not only in financial auditing of, say, the financial statements of the entities of the state, but as much as anything, as a leader and an inspirer and a value setter are also incredibly important. Some of those things are difficult to observe, but they're extremely important. As I mentioned in my address, this event in Indonesia, where they had their first clean financial statements, was a very, very big thing to them and to the way that the international capital market, I think, was viewing that administration. So in that, it's very important that the Auditor General is able to maintain an environment and the standards whereby the audit is robust so that a clean financial statement really means what it should mean, and that it is a true and fair view of the state of the state. That's for a consolidated financial statement, but read down into each individual entity as well. I think it's a difficult job being Auditor General, and it's a difficult job because it also has quite a lot of profile. But I think the real value to a lot of the audit function is to put management claims of the government, of the entities of government, under the microscope and to determine whether or not that's a true and fair view. There are other things. I mean, some jurisdictions have invested a lot in performance auditing. own forensic auditing. I sort of put them down a level personally from the really strong importance and the value that society gets from the key finance function.
He's flown all the way to be here, to be with us today. And while the applause is on, I would like to request both the presidents of Icap and ICMAP to come on stage and present him with a memento. Ladies and gentlemen, Mr. James Brumby. Today's mementos are being accompanied by what we call ajrak. It's a Sindhi stole, very traditional to our culture. Thank you very much.